will find out, number one, what goes through my mind when I assess the stock deal. Number two, the reasons of why I made the investment into the stock. And finally, number three, what are the returns that I've received thus far? And by doing so, I wish that I could prove to you that you can do three things after this webinar session. Number one, you can replicate my investment successes by building a stock portfolio that pays you dividend income year after year in both good times and bad times. And number two, you can improve your investment returns by reallocating your capital from losers into winners as efficiently as possible. And finally, number three, you can copy and paste this model into other markets such as the Singapore stock market, the Hong Kong stock market, and as well as the US stock market. And so, why is this important to you? This is because imagine you know all this stuff. You don't really need to chase stocks for quick gains in the stock market, which is usually the number one reason of how most people lose money in the stock market. And this could mean losing thousands, tens of thousands, and even potentially millions of your hard-earned money. But first, before I start the case study, let me just share with you a little background of myself and my personal journey as an investor. So it all started when I was 18 years old. I was doing my A-levels in TAR College, and at that time, a classmate of mine handed me a copy of the book, Rich Dad Poor Dad. I began to read it, and ever since, I was interested to learn more about finance and investing. And so what I did was to read anything and everything that I could get on the subject of investing. They include other books written by Robert Kiyosaki, Mary Buffett, Pat Dorsey, and Adam Coops. And from them, I learned that stock investing is about buying shares of great businesses at their lowest possible prices. So armed with some knowledge, I went online, downloaded my first annual report, which was from Maybank, and I began to read it. And after 20 minutes later, I find myself completely lost. I do not know what I was reading, and I couldn't tell the difference between Maybank, CIMB Bank, Public Bank, and so on and so forth. As such, I decided not to invest my money in the stock market, as I do not know what I was getting myself into. So instead, I signed up for ACCA to learn about interpretation of financial reports. And along the way, I began to practice what I've learned by reading annual reports of local public listed companies. I started with simpler ones like Nestle, Dutch Lady, and Panasonic, and I slowly moved on to something which is more complex, which includes bank stocks, property development, and oil and gas companies. I studied their business models, I took notes, and I compiled their 10-year financial results and their stock price data onto my Excel sheet. And after reading over 10,000 annual reports from more than 1,000 stocks, I discovered a generic pattern where stock price movements often tend to follow stock profits over the long term. Now, for example, if let's say we have stocks that reported consistent growth in profits, these stocks will tend to experience consistent growth in stock prices. For stocks that reported consistent decline in profits, they will tend to experience consistent decline in their stock prices. And finally, when we have stocks that reported inconsistent profits, these stocks will tend to experience wild fluctuations in their stock prices. And this revelation is so simple, and it took me years of studying, reading, calculating, data compilation, and investing to validate this finding. So what I did was to formulate a simple investment plan where I would invest in stocks that achieve consistent growth in profits at their lowest possible prices. And out of which, I now have 100% of my stocks paying me dividend income either on a quarterly or semi-annually basis, where my dividend yields range between 2% to 8% per annum, and I now collect my dividend income in 8 months out of 12 months every single year. So the question is this session for you? Well, I believe this session is for you if number one, you want to copy and paste my investment successes and start collecting dividends from your stock portfolio. Number two, you wish to reduce investment mistakes and boost your chances of making your first dollar and many more dollars from stock investing. And finally, number three, you wish to know the reasons for your investment losses, rectify them, and reconstruct your portfolio so that you can turn your losses into recurring profits. And now, with that being said, there are some house rules to be adhered to during this webinar session. I believe this session is not suitable for you if number one, you want to achieve fast capital gains from the stock market. For example, you want to know how to buy a stock at $1 and sell it for $2 or more at the quickest possible amount of time. Why? This is because firstly, I do not know how to do it, and secondly, I believe stock investing is about building wealth sustainably over the long term. Number 2, this webinar is not suitable for you if you want trade alerts and buy-sell calls. For example, you want to get stock tips, target prices, and buy-sell recommendations. Why? This is because I find that they are not necessarily helpful in making good investment decisions. Here, I make my own investment decisions based on actual facts, and I get these facts from the stocks, annual reports, quarterly reports, press releases, and their investors' presentations. Number 3, this webinar session is not suitable for you if you want sophisticated trading tools. Why? This is because I'm a dividend investor who invests to earn dividend income. I'm not a trader who earns profits from stock trading activities. And number 4, this webinar is not suitable for you if you want me to invest on behalf of you. Why? This is because my purpose here is to share my expertise with you so that you can replicate it yourself and build a stock portfolio the way you wanted it to be. I believe you should be your own fund manager and take 100% responsibility of your investment decisions. And lastly, this webinar session is not suitable for you if you want me to compensate your losses from any direct or indirect users of my materials. Why? This is because I do not have any control over your actions or inactions. If you make profits after this webinar, that's great. I won't take a single cent from you, and you will be able to keep 100% of the profits that you make from your investments. But if you incur losses, then you will be bearing 100% of the losses that you have made from your own investments. And if you agree to this, then let's move on. So, how does a perfect investment portfolio look like? Well, to me, a perfect investment portfolio is like a cash-generating machine that can do the following. Number 1, it pays out rising amount of dividends year after year. Number 2, it is a hedge against inflation. Number 3, it is able to achieve sustainable capital appreciation over the long term. Number 4, it has greater resilience in a downturn, just like what happened during COVID-19. And finally, number 5, it is passively managed so that we can spend our time doing more meaningful stuff than just monitoring the stock market every single day. And before I figured this out, I thought that stock investing is risky and it takes guts and luck to make a profit in the stock market. And this belief started when I was a schoolboy in the 1990s. At that time, I visited my relatives and they are all hooked by their TV screens, which were filled with lines of codes and numbers. I always wonder why these codes and numbers are so interesting, but nevertheless, they have captured the emotions of my relatives. For instance, if the number on the screen increased, some of them will leap for joy, while there are others who will sigh in regret. They say that this is the stock market, and it seems to me that it is a place to get rich quick without much labor. My dad was also caught up in the excitement, and he opened an account and bought himself a couple of stocks. And very soon, the Asian financial crisis hit, and the stocks that my dad bought had dropped by more than 50% in stock price. It was a bitter experience for him, and he was left very disappointed and very confused about investing in the stock market. And so, if you feel that stock investing is risky and you have lost money before in the stock market, there is a reason for it. And the reason is a lack of financial literacy and investment knowledge. Now, many do not realize that it takes a combination of multiple skills, such as accounting, finance, and investing to be successful in stock investing. Most of us are not taught or trained to become professional investors in school or in university. This has led to many people to believe that stock investing is all about taking risks and it's all about luck. So if that is you, do not be too hard on yourself, as you are definitely not alone in this. Personally, I realized that how we invest or manage our money is greatly influenced by our own upbringing at home. As for myself, I come from a middle-income family. I think it will make sense for me to believe that rich people will have different ideas about money and investing than what I had. So what I did was to head down to local bookstores such as MPH, Popular Bookstores, and Kinokuniya to read as many books as I can possibly get on the subject of personal finance, business, and investing. And that was when I discovered the concept of value investing. So what is value investing? Value investing is about building wealth sustainably by accumulating shares of good businesses at their lowest possible prices on a regular basis. And the reason why value investing works is because, number 1, The investment decisions are made based on facts. This is because we will gather our sources from the stock's annual reports, quarterly reports, press releases, and investors' presentations. And number two, we will study the stock first before investing. We will want to know what the business model is, the management team, the financial results, and its future plans before we invest our money into the stock. And with them, I was able to do two things. Number one, I was able to build a watch list of stocks that have great fundamental qualities. And as a result, I can easily avoid mediocre stocks that are loss-making over the long run. Number two, I do not need to rely on stock tips or to guess where the stock market is heading in the future in order to invest. And this is the skill set that allows me, my friends, and millions of value investors around the world to invest profitably and confidently in the stock market. And it is my privilege today to provide you a detailed account of my own investment journey so that you can join us in moving ahead in your financial life. And before I forget, here is a critical mindset that I would like you to adopt when investing. And the mindset is this: you have to see yourself as a business person, not one who is just merely trying their luck in gambling casinos. This is because investing in stocks is about becoming a co-owner of actual businesses that have real assets and customers that will generate recurring sales and profits in the long term. The process is like buying an apartment to receive recurring rental income for the long run. So what you want to do is this: you want to own the business, just like how you want to own that apartment that churns out rental income again and again over the long term. Okay, so now we have covered that. It is time for me to walk you through a real-life case study of a stock that I had invested into. I will do this on a step-by-step basis so that you will know exactly what goes through my mind when I invest into the stock. And hopefully by doing so, I believe that you can replicate this for your own stock portfolio. So the stock that I invested into is Mapletree Logistics Trust, or MLT. And I bought the stock at the price of 1.005 Singapore dollars per unit, which is before its brokerage fees, on the 23rd of December 2016. At that time, the latest available official documents that I can have access to will be its annual reports all the way up to 2016 and its quarterly reports all the way up to Q2 2017. And over here, if we take a look at its stock price at that time, you can see that it is quite boring, as it looks like it is going on the downtrend. So the question is this: why did I buy into it? So over here, I'm going to share with you 5 things that I studied about MLT at that time, which had led me to making that investment decision. And they are as follow. Number 1, let's talk about its business model. Mapletree Logistics Trust is a Singapore-listed real estate investment trust, or REIT, or REIT. At that time, it had a portfolio of 124 logistics properties worth 5.34 billion Singapore dollars, which are located in 7 different countries, namely Singapore, mainland China, Hong Kong, Japan, Australia, Malaysia, Vietnam. At that time, it had recorded 96.4% in occupancy rate, and it derived income from 525 tenants, where its key tenants include Coast Group, Equinix, Nippon Express, and XPO Worldwide. And as you can see, it is a substantial growth from its IPO listing in 2005, when it had 15 properties worth 422 million Singapore dollars at that time. So what I saw was that Mapletree Logistics Trust had been actively expanding its property portfolio over the last 12 years since 2005. And so to me, this is a very good sign, and therefore I will move on to studying the next item, is number 2, its past financial results. So first and foremost, my investment objective is to earn incremental dividend income from my stock portfolio. So what I want to do is this: I want to find out the track record of the stock in terms of its financial results. I want to know whether or not Mapletree Logistics Trust has delivered consistent growth in sales and profits over the last 10 years. So what I did was I compiled the stock's financial results over the last 10 years, and here's what I discovered. For the past 10 years, Mapletree Logistics Trust had generated consistent growth in group revenues and distributable income. Its group revenues had increased from 80.4 million Singapore dollars in 2016 to 349.9 million Singapore dollars in 2016. And this has contributed to its growth in distributable income, where it has increased from 40.4 million Singapore dollars in 2006 to 183.3 million Singapore dollars in 2016. And as a result, this has caused its distribution per unit, or DPU, to increase from 5.07 cents in 2006 to as much as 7.38 cents in 2016. As such, I would say that its past financial results have been really good, as Mapletree Logistics Trust had delivered consistent growth in sales and profits to its investors. But looking at the past financial results is just one thing. So the next thing I will be looking at is number 3, the present financial results of Mapletree Logistics Trust. So here's the thing. If I want to receive incremental dividend income in the future, the stock must continue to grow its profits. And in order to do that, the stock must invest for the future. And in order for the stock to invest for the future, the stock must first be financially steady in the present today in order to finance these investments. And so I'll be looking at 2 things. Number 1, the stock must remain profitable for the last 12 months. And number 2, the stock must have a strong balance sheet in order to fund these investments. So let's take a look at the first one. As you can see, over the last 12 months, Mapletree Logistics Trust has generated 358.5 million Singapore dollars in group revenues. From it, it has made 182.2 million Singapore dollars in distributable income, and it has paid out as much as 7.32 Singapore cents in distribution per unit, or DPU. So if I compare this to its past 10-year financial results, I would say that Mapletree Logistics Trust has sustained its growth in profits over the last 12 months. And next, we'll be looking at its balance sheet. So at Q2 2017, Mapletree Logistics Trust had 2.05 billion Singapore dollars in total debt, and as a result, it has recorded as much as 37.6% in its gearing ratio. Its weighted average cost of borrowings was at 2.3% per annum, where 81% of its debts are hedged into fixed rates. Mapletree Logistics Trust was given a Baa1 with stable outlook in credit rating from Moody's, and this shows that Mapletree Logistics Trust had a strong balance sheet and it is capable of funding any growth initiatives in the future. But the question is this, where will it invest its money? That's when we'll be looking at number 4, its growth initiatives. So at that time, I learned that Mapletree Logistics Trust is embarking on a number of growth initiatives. First, on the 15th of December 2016, Mapletree Logistics Trust had completed its acquisition of 4 properties in Australia for 151.9 million Singapore dollars, and this had expanded its property portfolio to 128 properties valued at 5.5 billion Singapore dollars. Second, Mapletree Logistics Trust is targeting to complete a redevelopment project on the 76 Pioneer Road in Singapore, where the building is being converted into a 5-story ramp-up logistics facility by Q3 2018. This project is estimated to cost 100 million Singapore dollars, and it will increase the gross floor area, or the GFA, of the property by 1.8 times to 72,000 square meters. And third, the main sponsor and investor of Mapletree Logistics Trust, which is Mapletree Investments Private Limited, had 36 logistics properties under development across Asia, where 30 of these properties are located in China. So this is very important because Mapletree Logistics Trust was granted rights of first refusal to acquire these properties once they have been developed and leased to tenants in the future. So up to now, Mapletree Logistics Trust has fulfilled 3 things. Number 1, it has a solid financial track record in the past. Number 2, it has a strong balance sheet in the present. And finally, number 3, it has revealed a number of initiatives to sustain growth in the future. So this to me is a classic example of a good stock. But a good stock is only a good investment if the stock is undervalued. And therefore, number 5, I will be calculating its valuation ratios. Over here, I have calculated 2 valuation ratios. The first one is the current gross distribution yield of Mapletree Logistics Trust based on my gross purchase price of 1.005 Singapore dollars per unit. In step 3, we have learned that over the last 12 months, Mapletree Logistics Trust had generated 7.32 cents in distribution per unit, or DPU. So if we take 7.32 cents in DPU and divide it with the gross purchase price of 1.005 Singapore dollars per unit, my gross distribution yield would be 7.28% per annum. The second valuation ratio that I will calculate would be its current PB ratio. So here's what I did. I obtained the latest net asset value per unit figure from its Q2 2017 report, and of which Mapletree Logistics Trust have reported 1 Singapore dollars in its latest net asset value, or NAV per unit. Then I take my gross purchase price of 1.005 Singapore dollars and I divide it with 1 Singapore dollar in NAV per unit, and from which I have calculated that its latest PB ratio was 1.005. So this means the current gross distribution yield is 7.28% per annum and the PB ratio is 1.005. But knowing the current gross distribution yield and PB ratio is not enough to make the decision. So the next step here is to calculate its past long-term averages when it comes to distribution yield and PB ratio. And then I will compare the current distribution yield and PB ratio with its past long-term averages. And as such, I have produced myself a table as shown on the screen. Here, there are a few things that I would like you to take note of. Number one, the financial year for 2006 to 2010 is for the year ending on the 31st of December. And the financial year from 2012 to 2016 is for the year ending on the 31st of March. So the financial year for 2012 is for a 15-month period, which started from 1st January 2010 to the 31st of March 2012. Number two, the closing stock price here refers to the closing stock price for every financial year end. And finally, number three, the stock price for 2008 is substantially low at 35 Singapore cents per unit due to the global financial crisis, which was in fact the best time to invest in Mapletree Logistics Trust. But here, to be practical, I will exclude the stock price for 2008, and of which I found that the lowest distribution yield for Mapletree Logistics Trust is 4.25%, the highest distribution yield is 7.67%, and its average distribution yield is 6.37%. So as an investor, I will try to buy the stock at its highest distribution yield of 7.67% as it is undervalued. I will not buy the stock at its lowest distribution yield of 4.25% as at that time it is overvalued. So based on the current gross distribution yield of 7.28% per annum, it is above its long-term average and it is quite close to its highest distribution yield over the last 10 years. And therefore, it is undervalued. And moving on, I also did the same thing for its PB ratio. Its lowest PB ratio at that time was 0.92, its highest PB ratio is 1.63, and its average PB ratio is 1.17. So as an investor, I will buy Mapletree Logistics Trust if its PB ratio is below its long-term average. In this case, the current PB ratio is 1.005. And so I find that the stock is undervalued. So in summary, I've decided to buy Mapletree Logistics Trust at the price of 1.005 Singapore dollars per unit. This is because, number one, it has a resilient business model. Number two, it has a long-term track record of consistent growth in profitability. Number three, it has a stable growth in distribution per unit, or DPU. Number four, it has a solid balance sheet to finance initiatives to sustain growth in the future. Number five, it has revealed tangible plans to grow its property portfolio. Number six, its current PB ratio is 1.005, which is below its long-term average. And finally, number seven, its gross distribution yield is 7.28% per annum, which is above its long-term average. So what happened after I had invested into Mapletree Logistics Trust? Now let us fast forward to today, which is the 6th of July 2021, and I've held on to this stock for more than 4 years. So what happened is this. First, Mapletree Logistics Trust had continued to expand its property portfolio. As you can see, since I purchased the stock, Mapletree Logistics Trust had increased its property portfolio from 124 properties worth 5.3 billion Singapore dollars in Q2 2017 to now having 163 properties worth 10.8 billion Singapore dollars in Q4 2021. When I first bought the stock, it derived income from 525 tenants. Now, it derived income from as much as 748 tenants in Q4 2021. Second, in terms of its financial results, Mapletree Logistics Trust had continued to increase its group revenues and distributable income in that period of time. Group revenues had increased from 349.9 million Singapore dollars in 2016 to as much as 561.1 million Singapore dollars in 2021. Meanwhile, distributable income had increased from 183.3 million Singapore dollars in 2016 to as much as 333.1 million Singapore dollars in 2021. And as a result, I have consistently received dividends or income distributions from Mapletree Logistics Trust. As you can see, over the last 4.5 years, I have collected as much as 35.759 Singapore cents in gross distribution per unit, or DPU. So based on my gross purchase price of 1.005 Singapore dollars per unit, my gross cash returns would be 35.6% in that 4.5 year period. Meanwhile, in terms of capital appreciation, Mapletree Logistics Trust is now trading at $2.10 per unit. So my capital appreciation today would be 109%. And so if you add my gross cash returns of 35.6% with my gross capital appreciation of 109%, I have made a total of 144.6% in total gross returns over the last 4.5 years. So my question to you is this just a lucky break? Well, to me, it is not a lucky break. This is because I have been replicating the same 5-step process as demonstrated earlier to invest into other dividend-paying stocks such as Fraser's Logistics and Commercial Trust, DBS Group, OCBC Bank, and so on and so forth, which resulted in me collecting increasing dividend income year after year. And so, what if you know how to do this? Can you see that you too can build a stock portfolio that pays you increasing dividend income year after year without needing to predict stock prices? You have just witnessed how I personally use the 5-step process to first identify high-quality dividend-paying stocks like Mapletree Logistics Trust from others that are not. And number 2, to do a proper valuation on these stocks so that I can invest in them only when they are undervalued. And so, as you can see, mastering the 5-step process, beginning from the business model to the past financial results, to the present financial strength, to knowing the growth initiatives, and finally, to calculate its valuation ratios is absolutely crucial. And this is because it enables you to, number 1, generate passive income every 3 or 6 months once from your stock portfolio. Number 2, to earn higher dividend yields and capital gains from your stock investments as you buy these stocks at their lowest possible prices. And finally, number 3, to reduce your investment risk with lower capital losses from your stocks if they drop in prices. This is also because you buy them at lower prices as compared to other investors. In fact, when the prices of your stocks drop, this often signals a good time to buy more of these stocks in the stock market. And in essence, you will be moving one step closer towards attaining financial freedom. So where do you go from here? Well, the 5-step process, which is my own personal blueprint to invest confidently and profitably in the stock market, is now officially yours. You can take the same blueprint and replicate it to build your own stock portfolio. Right now, you can go to websites of your preferred stocks, download their annual reports, study them, compile their financial data, read their chairman statements, and calculate their valuation ratios for the past 10 years. And all this information are readily available to you for free. So now you can immediately start right away and build yourself a stock portfolio that pays you dividend income year after year. But then you may ask, Ian, what if I do not know how to study or have the time to study all of these financial reports? Can I just skip the process and just invest my money in the stock market? Well, the answer is yes, you can. You can open a stock brokerage account and start buying stocks in the stock market. Nobody's stopping you from doing that. And if you want to do that, I have 2 questions for you. Number 1, how do you separate good stocks that make you money from bad stocks that don't without reading financial reports? And number 2, how will you know whether or not if a stock is undervalued or overvalued if you do not calculate its valuation ratios? So as you can see, one thing is for sure. If you want to build a stock portfolio that pays you increasing dividend income year after year, you cannot skip this process. Investing is a skill set, and it takes time to master. I have studied and read annual reports on a daily basis for the last 8 years of my life, and I continue to do it today. I started with a small portfolio, and I've gradually grown it as I continue to sharpen my investing skills over time. So it is the same thing with many things in life. For example, if you want to become a doctor, you have to go to medical school, complete your housemanship, before you are qualified to be a medical doctor. So the bottom line is this. You have to first learn how to invest, and then you have to put in the effort to do so before you invest your money. You cannot skip this process if you want to achieve consistent results, period. But with that being said, I also understand hours per day in learning, studying, reading, and calculating to assess a stock deal for investment is a long time. And I do not know exactly what is your confidence level when it comes to stock investing. Is it 20%, 30%, or 50%? And if that is the case, what if I can walk you through the process of building a stock portfolio that pays you consistent growth in dividend income year after year on a step-by-step basis? Would it increase your confidence level to the 80% or the 90% range? And what if you have access to all my ongoing compilation works and case studies on these dividend-paying stocks so that you can shorten your learning curve from 2 to 3 years to just 2 to 3 months? Well, if you're interested, I'm going to give a few of you that opportunity. And here is how we are going to do that. So right now, I'm going to walk a limited number of students through this highly customized masterclass. And this masterclass is known as Dividend Walk. And as one of my students, we'll be creating a stock portfolio that pays increasing dividend income year after year from start to finish together. So if you want to copy and paste my investment strategy and get it right on your next stock investment, and as a result, move one step closer to achieving financial freedom, then this masterclass is designed for you. For a start, Dividend Walk is an implementation program. And by the time we are done, you will have a complete strategy to build a stock portfolio that pays you increasing dividend income year after year, either on a quarterly or a half-yearly basis. And here's the best part. Your dividend income will be credited into your bank or stock brokerage account just like clockwork. Here, let me just give you a breakdown of what exactly we are going to do together. First, in Module 1, you will learn essential principles that ensure stock investment success that is currently being used not just by myself, but by stock investing legends such as Warren Buffett and Charlie Munger. These principles will transform you from just someone who is trying his luck in the stock market to an investor who is business-minded that is focused on building long-term wealth via accumulation of shares of good companies. Second, in Module 2, you will discover the two-step funnel that I personally use to invest profitably in the stock market. This involves first, building a watch list of high-quality dividend-paying stocks, and second, to find undervalued stock deals from this watch list. And as a result, this will ensure you from investing only in fundamentally solid stocks at their lowest possible prices. And to do this, the question you may ask yourself is this: how do I separate good companies from the bad ones? Well, the answer lies in my ability to read and interpret financial statements, and therefore, we will move on to Module 3. Now over here in this module, I will walk you through step by step on how I interpret an actual financial statement of a public listed company and how I calculate its financial ratios. And this will allow you to focus only on winning stocks and thus reducing needless investment mistakes that will cost you time and money. And once you know how to do this, the next question will be, how do I tell if a stock is overvalued or undervalued? And as such, let's move on to module number 4, which is a full-fledged PE ratio masterclass, where over here, I'm going to share with you the art of using PE ratio to determine if a stock is undervalued, fairly valued, or overvalued. And this is super important simply because we always want to buy good stocks at their lowest possible prices. And with that covered, let's move on to module number 5, which is my Real Estate Investment Trust or REIT Masterclass. Now, this is a huge topic as REITs listed in Malaysia, Singapore, and Hong Kong are one of the best places to invest in a global portfolio of strategically located commercial properties which are worth billions of dollars today. And these are the best places to hunt for great dividend yields. And by the end of Module 5, you will end up having both the mindset and the skill set needed to invest profitably and confidently in the stock market. But now, if you want to see how I put all the pieces together, then I will show you how to assess a stock deal from scratch in 8 different full-fledged case studies from Module 6 to Module 13. So in Module 6, I will do a case study on one of the largest diversified REITs in Malaysia. This REIT owns a large portfolio of properties consisting of well-known shopping malls, office buildings, hotels, a warehouse, a hospital, and a university campus. Then in Module 7, I will do a case study on a reputable neighborhood grocer in Singapore, which operates a chain of grocery stores and supermarkets across Singapore. Subsequently, in Module 8, we will do a case study on a stock where this stock is one that manufactures home appliances under a well-known brand in Malaysia. Next, in Module 9, we will do a case study on one of the fastest growing plastic packaging company in Malaysia, where this company has achieved double-digit growth in its revenues and earnings over the last 10 years. Now coming to Module 10, we will do a case study on a niche financier of more than 30,000 second-hand vehicle buyers, which operates out of the Klang Valley in Malaysia. Then in Module 11, we will do a case study on a manufacturer of a well-known MSG brand in Malaysia, who not only distributes its MSG products locally, but also exports them to the Asia-Pacific region and also to the Middle East. As for Module 12, we will cover one of the top banking groups in Singapore, who is also the largest shareholder of a well-known life insurance company in Singapore. And finally, in Module 13, we will do a case study on possibly the most high-tech insurance company in the world today, where we will explore its evolution from being a life insurance company to a high-tech financial conglomerate, which has businesses in 4 key ecosystems, namely finance, automobile, healthcare, and smart city. And by then, you will see that the 5-step process is applicable to stocks across many industries. And by Module 13, you will be more than capable of taking this 5-step process and start building a portfolio that pays you increasing dividend income year after year. But then the question is this: let's say you know how to find good stocks to invest. The question is, do you have the time to sit down and study these stocks from scratch every single day? Well, personally, I totally get it. And here's the thing. What if I can give you immediate full access to my case studies, templates, and presentation slides of 50 plus high quality dividend paying stocks listed mainly in Malaysia, Singapore, and Hong Kong? This means you can save huge amount of time as you are leveraging on my ongoing data compilation works of key financial data and actual information on these stocks in all my handcrafted materials. So this leads us to the next question, and that is, what is in my templates, case studies, and presentation slides? Okay, so let me start off with the templates. Here, I'm going to quickly list down 5 key features that I have personally included in my templates. So feature number 1, we have the stock's 10-year profitability and balance sheet data, where I have compiled the stock's revenues, shareholders' earnings, earnings per share or EPS figures, borrowings, and shareholders' equity figures over the last 10 years. And I had calculated key financial ratios such as return on equity and gearing ratio for each of these stocks. This will allow us to find out if a stock has delivered consistent growth in sales and profits and whether or not it has maintained a strong balance sheet throughout the 10-year period. Next, feature number 2, we have the stock's 10-year cash flow management data. This includes the compilation of the stock's cash flow from operations, its net capex figures, its net amount of equity and borrowings raised, its dividend payments, and finally, its cash reserves over the last 10 years. This allows us to find out if the stock has been consistently generating positive cash flow from operations, where it chooses to invest its money to sustain its future growth, and how much dividends it has paid out to its shareholders over the last 10 years. Then let us move on to feature number 3, the stock's 10-year operating and segmental data. This would be dependent on the stock's business model and the industry it is involved into. For instance, if I compile data of a bank stock, I will compile relevant data such as the size of its loan portfolio and its non-performing loan ratio. This is so that I can find out if the bank has been able to expand its loan portfolio while maintaining low default rates over the last 10 years. However, if I compile data of a manufacturing stock, I will compile data such as how many factories the stock is operating, what are the products, its annual production capacity, the size of its customer base, and as well as its breakdown of geographical sales, if any. This will allow us to understand the business model behind the stock in great depth. Now, coming to feature number 4, we have the stock's 5-year quarterly data. Here, this will include the compilation of the stock's quarterly sales and earnings figures over the last 20 quarters, which allows us to find out if the stock has consistently delivered growth in sales and profits on a quarterly basis. And finally, feature number 5, we have the stock's 10-year valuation data. Over here, I have prepared a table consisting of the stock's PE ratio, PB ratio, and dividend yields calculations over the last 10 years. This is so that we can use it to compare the stock's current PE ratio, PB ratio, and dividend yields with its long-term past valuation ratios, so that we can determine if the stock is undervalued, fairly valued, or overvalued. So right now, let us move on to my case studies and presentation slides. Basically, they will consist of 2 parts. Part number 1, it consists of my writings and slides on the stock's business model, its financial results, balance sheet strength, and also its latest developments to sustain growth in the future. This allows us to determine if the stock is fundamentally solid so that we can focus on winning stocks and avoid investing in the bad ones that will cost us time and money. Then we have part number 2, where it consists of the stock's PE ratio, PB ratio, and dividend yields calculations, and the comparison with their long-term past valuation ratios. This will help us to tell if the stock is undervalued, fairly valued, or overvalued. Also, I will compare its long-term stock price performance with its long-term earnings figures to show you the relationship between the two, so that you will have a better understanding on how the stock price moves in relation to its earnings over the long term. So in essence, you will be given a highly customized set of materials such as video tutorials, ebooks, and as well as templates, case studies, and presentation slides of 50 plus high-quality dividend-paying stocks, so that you can fast-track yourself towards building a stock portfolio that pays you increasing dividend income year after year, and by doing so, moving one step closer towards financial freedom. But then you may ask, all these are really good stuff, but does it work for me? So here, let me just briefly share a few of the many results that my students have achieved after subscribing to Dividend Walk. So the first one is an email that has been forwarded to me by Alex, my fellow student. What happened was this. Alex had invested into Maybank in 2020. Subsequently, he received an email notification from Maybank that tells him that Maybank had banked in 1,170 ringgit in dividend income into his bank account on the 6th of May 2020. And to me, that is pretty sweet. And next, we have a contract note sent to me by Sam, another of my students. So over here, the contract note stated that Sam had invested into Fraser's Logistics and Commercial Trust, which was formerly known as Fraser's Logistics and Industrial Trust during MCO 1.0 on the 23rd of March 2020 at the price of 67.5 Singapore cents per unit. Since then, Sam received as much as 10.92 Singapore cents in income distribution, and now he is in a capital gain position where the market price of Fraser's Logistics and Commercial Trust is $1.50 per unit, which is very impressive. Alright, so I have shown you that it is entirely possible for you to build a stock portfolio that pays you increasing dividend income year after year without relying on stock tips, rumors, buy-sell calls, and recommendations. And by now, you know that this is possible if you possess the right mindset and skill set to first evaluate the fundamental quality of a stock, and second, to evaluate the stock price. And here's the best part. You can replicate this formula to invest in different markets such as the Singapore stock market and as well as the Hong Kong stock market. So if you are ready to acquire the materials needed to start making your first dollar and many more dollars from stock investing, here is how you can sign up for the membership. The classes, the templates, and case studies of 50 plus high-quality dividend-paying stocks listed mainly in Malaysia, Singapore, and Hong Kong have been made available in a private members area so that you can get started immediately. By the time you have completed the modules, you'll be able to fully leverage on my templates and case studies to select your own preferred dividend-paying stocks and build yourself a portfolio that pays you increasing dividend income year after year. So what about the price? The retail price for Dividend Walk is 999 ringgit per annum. And if this sounds expensive, keep this in mind. Typically, it will cost you between 5,000 to 10,000 ringgit to attend a 3 to 4 day workshop in Malaysia, either on stock investing or stock trading. And even after these trainings, you will most likely be stuck to do your own research and homework on your own. Here, Dividend Walk is designed to be a long-term companion to guide you on a step-by-step basis to build your portfolio at a fraction of the price of a typical workshop. Once you get the hang of it, you will own this skill set for life. But the fact that you are still with me on this webinar session shows that you have a sincere desire to achieve the same investment success yourself. So here's what I'm going to do. Personally, I would like it so much to see you succeed, and I will be absolutely thrilled to know that you had gone through the materials and had used them to improve your financial life. So if you are willing to invest in yourself today, I'm going to invest in you too. Here I'm going to give you a 50% discount and reduce the price to 499 ringgit per annum. To put that into perspective, you have just seen how I built myself a stock portfolio that pays me increasing dividend income year after year from scratch using the 5-step process as mentioned earlier. So would you invest a few hundred ringgit to have the same exact formula so that you can replicate it for yourself? I certainly hope so. Now with that being said, there is a small catch. Your discount is only as good as the next 60 minutes. Why? This is because being decisive and committed are traits commonly shared by successful investors. Here's the thing. It is almost impossible for you to build sustainable long-term wealth in stock investing if you are not committed to learn and use the right mindset and skill set that has been made available in this membership. So I would like you to get off the fence and invite you personally on a journey to become a kick-ass stock investor who earns increasing dividend income year after year starting today. Now over here, in addition to the 50% discount, I would like to make this a completely safe and risk-free decision for you. And to do that, I'm going to give you a 3-part guarantee that is completely unheard of. So guarantee number 1, I'm going to give you a no questions asked 30-day money-back guarantee, which means if you find that dividend wallet is not your thing, I would like to give you a full refund, and you can do so by contacting me at support@kclau.com. Please do it within the first 30 days after your subscription so that you won't burn a single cent, and that is my guarantee. Next, guarantee number 2, the 50% discount will be locked for life. This means you fix your membership fees at 499 ringgit per annum without increment for life. And finally, guarantee number 3, I would like to give you 300 ringgit in bonus dividends if you can complete my dividend investing challenge within the first year of your membership. Now, this is where things get interesting. Believe it or not, I'm not here to just sell you another membership program. Why? This is because today, there are so many people who buy online courses and membership programs, but they fail to achieve their desired results simply because they do not take any action. My goal here is to transform you into a stock investor who is capable of building and managing a stock portfolio that pays you increasing dividend income year after year. So while I do my part in creating and updating the materials to speed up your learning curve, your part is to consume these materials and use them to achieve your investment goals. Otherwise, it won't make any sense. And so, if you are serious about achieving real results, here is my dividend investing challenge to you and the instructions to claim your 300 ringgit in bonus dividends. To get your 300 ringgit, you need to step number 1, watch and complete all tutorial videos made available in the modules within the membership. They will equip you with the mindset and the skill set needed to build a dividend-based portfolio. Then moving on to step number 2, you need to invest in 5 different stocks which fulfill the criteria below. First, the dividend yield of the stock must be above 4% per annum, and it has to be above its long-term average, be it a 5-year average or a 10-year average. Second, the PE ratio of the stock must be below 15, and it has to be below its long-term average, be it a 5-year average or a 10-year average. You may leverage on the templates and case studies of 50 plus high-quality dividend-paying stocks to build your stock portfolio. And finally, step number 3, keep a copy of the statements of your investment accounts and dividend vouchers. After you have received your first dividend payouts from each of these 5 stocks, please email a copy to prove that you have received their dividends at support@kclau.com. And you can do it anytime within the first 12 months after subscribing to Dividend Walk, and I will send you your well-deserved 300 ringgit in bonus dividends via bank transfer. I have never seen anyone else who is doing this, so why am I doing it? Well, this is because I absolutely want you to succeed. I want to transform as many people as I possibly can to become savvy in stock investing, and to me, it is a lot more meaningful than just earning the membership fees itself. So in essence, there is no way you can lose here. This is because at bare minimum, you have a 30-day money-back guarantee. Your 50% discount is locked for life. And if you have invested into 5 stocks and collected dividends from them, I'm going to send you 300 ringgit in bonus dividends into your bank account. So here's how you can get started. Click the button that's just shown up right now to join. And when you do that, a fully secure checkout page will pop up in a new window. Please follow the instructions on the screen to complete your subscription. And that's it. Once you have entered the private members area, watch the welcome video to get started, follow along the 13 modules, and you can start to refer to all of my templates and case studies of 50 plus high quality dividend paying stocks to build your own stock portfolio. So at this point, let me just recap the offer. Number 1, you will be officially enrolled into Dividend Walk, which is a membership program that will not only educate you, but also reward you to build a stock portfolio that pays you increasing dividend income year after year. Number 2, if you join before the deadline, I'm going to give you a 50% discount, and as such, reducing your membership fee from 999 ringgit per annum to 499 ringgit per annum. Number 3, you will get a 30-day 100% money-back guarantee so that you can check it out for free. Number 4, the 50% discount is locked for life. And finally, number 5, you will be able to take up my dividend investing challenge. You can follow the modules, invest in 5 stocks, collect their dividends, and then email me their investment statements and dividend vouchers within the next 12 months, and I will pay you 300 ringgit in bonus dividends via bank transfer. And so I would like to invite you to get on board right now. So click the button below to get started, and I will see you in the private members area. Thank you so much for attending this training session, and I would like to wish you the very best in your quest to become better in stock investing. Goodbye and see you soon.